Accountfully here. Russ from Secure CPG. Today we're talking about some accounting and insurance considerations for the consumer packaged goods space. How you doing, Russ?
Doing great, Brad.
All right, inventory valuation. How does inventory valuation impact insurance?
It's really critical when brands are looking at the value of their inventory and actually where it's stored. One thing that we see a lot with brands that are starting or are scaling is, their inventory fluctuation changes, week to week, month to month in some cases. And having the value of that inventory accounted for so that we can accurately cover the product and make sure that if the product is damaged, the inventory is damaged, that brand's getting a check in the right amount, right? No one wants to have $100,000 of inventory be damaged or lost, and then realize they either have zero coverage or only 20 to 30% of it's covered. So they're stuck, without all of that inventory to sell, and then they're paying to have it remade. We've had a handful of brands come to us after incidents with their co-mans or their 3PLs or their warehouses where they store their product. They've had a loss, and then they're paying out of pocket to remanufacture.
So from an accounting standpoint, a couple questions. Is that value at the cost value or the retail sale value?
That's an awesome point. So we can structure it either way, and it's really based on what the brand is looking to recoup. Of course, if let's say you're insuring it for the cost that you're selling it for versus the cost that it is to manufacture, a higher dollar amount is going to cost more premium dollars to insure it because you're insuring a higher value. That's one of the things we go over with brands in one of our in-depth conversations with them is trying to understand, what they're trying to accomplish on insuring it and, what dollars they have available from a premium standpoint to allocate to this.
From an accounting standpoint, is there any risk or is there audit potential if you're over insured versus underinsured?
Not really. With something like inventory or property, you have to basically be able to show that you have that value. They won't let you insure for more than you have. Otherwise, it creates a conflict of interest where you could submit a claim, potentially make money in surplus of what you actually have in value. Similar to getting your homeowner's policy, right? If you have a $500,000 home, they won't let you insure it for $1 million. Then you're, potentially adversely incentivized to burn down your house and make a $500,000. And if you want to touch on that a little bit on how, I'd love to hear from your viewpoint on what it looks like on an accounting basis when you're, looking at inventory and the value of it.
Yeah, the valuation of inventory, how you should look at it is basically what are the total costs that are incurred to have a product ready to sell at your warehouse or at a 3PL warehouse. That includes raw materials, packaging, freight in, duties, taxes, labor, co-mans, etc. Right? So a big part of as a business owner, a brand owner, you should be consolidating all of those expenses and outflows and identifying what all those totals are from a finished good product to a raw material product, adding them together as well as then making sure that you're accounting for them on a month-over-month basis, right? So that is your biggest resource as an inventory-based company. Making sure you have good counts on those, month over month over month, and all the locations you own inventory is really the best practice there. So I think the last thing I'll say, this is then from a risk standpoint for a small business owner or a CPG owner on the insurance side is on the inventory valuation is if you're not accounting for everything that you have and you own in inventory. Let's say that you really own $1 million, but on your books you only have 300,000. You get insured for 300,000, but then you lose everything and you realize you had a lot more of it. That would be the biggest risk here, right?
Yeah, I agree 100% that if you're not keeping up to date with the actual numbers and values you have in inventory, and your policy doesn't reflect any change that you've had throughout the year, you could be stuck holding the bag in a loss scenario.
All right. Well, good stuff. Inventory valuation, accounting, and insurance considerations. Thanks, Russ.
Thanks, Brad.